Good morning, everyone. Hope you can hear me. Let me just check because that doesn't sound very good. Yes, it's okay. Should be okay. Hope you're well. It's Tuesday. It's absolutely miserable here in London. I've just checked the humidity before I came on. It's 98% humidity and it's about 4 degrees out there. So it's miserable, cold, damp. So you're in the right place if you've got weather like this. I've just spoke to my cousin down in Melbourne. He said it's 35 down there and Maftin. And my daughter's been on the phone to my wife this morning out in Cyprus, and she said it's pretty miserable there as well. So anyway, February, let's brighten the day up for everyone. Good evening, good morning, wherever you are in the world. Let's talk scalping. And I've just realised I'm not sharing my screen, so let's have a look. What we want to show you today. There we are. So we're going to look at scalping strategies. There's lots of ways to skin a cat. Is that spelled right? Strategies. Yes, it is. And there's lots of ways to make money. There's lots of ways, even more ways to lose money. As we said last night, if you were with me last night, it really is all about you. So if you didn't watch last night or you weren't around, I did rattle on for nearly 90 minutes or over 90 minutes, but you know, that's the mantra. That's really is. If you get anything out of last night, it's that, you know, you need to understand yourself. You need this to make money in this business. It's not about strategies, excuse me, which lots of people focus on. It's not about indicators. It's not about, you know, gurus or the platform you're using or anything else. It's about you. So let's let's move on today. We are going to look at strategies today, but focus also on you as an individual and you as a trader, because lots of people get attracted to scalping because of its big benefits, ignoring some of the drawbacks, and very quickly blow their account and think they can't trade at all. It's about finding the right thing, and the right thing that works for you is the most important thing. So hopefully everything's all right. Let me just check if everything's okay. Everything seems to be hunky-dory, apart from see where I live? Oh, dearie me. Cold sores, horrible things. Let's make me a wee bit smaller. You don't want to see my ugly mug, do you? There we are. So scalping strategies today. So let's crack on. We've got quite a few slides again, so it'll be about an hour or so today. And then we'll look at some live charts. We'll look at some old setups from some of my old MT4, MT5 days. But again, doesn't really matter about the strategy. It doesn't matter about the platform. It's about how you apply it. It's the key thing. So let's crack on. Let me see how this is going to work. Doesn't want to move. There we are. There's my ugly mug. Do what's probable, keep it simple. It's all in the numbers. So as we said, as I say every single time, you know yourself, keep it simple, don't overcomplicate things. Today we're going to focus on the short time frames, the scalping time frame. So today we're going to look at, are you as a person designed to be a scalper? Lots of people think they are and they're not actually cut out to be it. What it is, definitions and approaches out of the dictionary. 5 ideas for getting started. These are just my ideas. There's nothing, there's no rocket science in there. Pros and cons, 6 benefits, 6 risks, flips of each other, obviously, and some other things thrown in there. What makes a good scalper? What are the attributes of a good scalper? We'll come back to that. A lot of what we talked about last night, and some strategies. I've talked about Heikin-Ashi, moving average, pivot points, triple exponential moving average and average moving average, and obviously VWAP is the other key one as well. We'll have a look at that as we go through, and we'll bring up some of our live platforms, excuse me, and our setups on our trade lockup platform as well. So let's crack on. So, you know, some people are intrinsically negative. Some people are intrinsically positive. Markets go up and down and spend a lot of time going sideways, but when they trend, they can be bullish for a long time, like we've seen in the stock market since the great financial crisis and the reaction to the COVID crisis, or they're bearish, you know, then so markets go up and down, but mostly they're going sideways at the moment. We're in big bullish market for stocks, and gold in particular is a fantastic run for the start of 2025. So, you know, as a scalper, you can't get attached to one type of approach. You've got to be able to flip between the two, whether you're doing it in an automatic way or you're doing it manually. Lots of people say to me, well, I've got an automated system, Stuart. I use EAs, I use a robot, I've coded all this and I don't care, just let it run. That's not true. As a human being, you're always twiddling with things, looking at things, trying to improve it. You're not happy with it, and so your personality is always coming through, whether you're a coder or you're not a coder. So understand yourself if you're going to want to scalp, and make sure you don't get stuck in the trap of being one side or the other of the platform. So how do you see yourself? You're the sort of guy that can jump off, or sort of trader that can jump off this diving board and get into the market. Are you the sort of person, trader, that sort of gets drifted along like a jellyfish in the currents of the sea? Or if on top of that, it looks very, very innocent, but it's very, very dangerous. You've got a big sting in the tail, so you do know what you're doing. Can you furrow your own foe in the choppy waters of trading? So how and why are you trading? How do you see yourself? That'll impinge your style, whether you're scalping or whether you're a swing trader or whether you're a long-term investor. Success in day trading, as Andrew Aziz says. I talked about lots of people I follow on Twitter. I still can't call it X, really. It's very X though at the moment, isn't it? But anyway, see this morning he's offered to try and buy OpenAI, and a very short shrift from Sam Altman. It was a very, very fascinating interview. See if you can find it on Bloomberg. It was on Bloomberg Telly this morning. A fantastic response from Sam Altman at OpenAI. Anyway, enough about Mr. Trump. Success in day trading is all about finding the right balance between risk and reward, exactly, and doing it and repeating it day after day after day after day. That's one of the beauties of scalping. You get to find your process very, very quickly. So because you're in the live markets every single day. So the dictionary calls it, a quick method, short-term time frame, enters and exits in a matter of seconds. That's scalping. The main objectives are small but frequent trades, typically no more than 5 minutes. But I've had multiple 5-minute trades all day long. And I don't call myself a scalper, but I'm a trend follower. So if the trend's going up, I'll be in and out that way as well. Just because it's fast does not mean it's easy or profitable. There's this very odd opinion or sort of value around scalping that it's fast, so therefore it's easy. I don't know where that's come from, but lots of people get attracted to it just because it's can be done and dusted, and everybody's got very little impatience these days, haven't they? So fast, it needs a lot of attention to take the trades, whether you're trading for an hour, 30 minutes, or in and out during the day. You've got to be, again, whether you've got an automated system or you're doing a manual system, you need to be watching the position from open to close. Best time to trade, unquestionably, for scalpers is the high liquidity, tight spread time of the day. That's usually the London session where I am, and the overlap is even better when New York opens. Spreads obviously vary and can widen quite significantly after 6 o'clock London time, particularly after 4 o'clock. Well, after 6 o'clock certainly, and sometimes after 4 o'clock London time. That's the London fix, 1600 hours. So London fix is when the major institutions, the major financial institutions globally based in London, will set their interest rates for the day. So it used to be done on the telephone. It always a bit dodgy. It's still a little bit dodgy, one would argue, but it's done electronically and automated now. But anyway, so spreads tend to widen after 1800 hours GMT. It doesn't mean you can't scalp then, just be aware of your entry and exit prices. Can be a bit further away than you think they are, and that's key when you're scalping, because every pip counts. We'll more on that in a bit. It can be very stressful, does require a lot of discipline, but so does every single type of trading. You've got to stick to the system. Your personality is key. And the other key thing is, you need a good connection. There's no point in trading with a dodgy internet connection. Have a look at VPS services and to guarantee that connection, because every pip counts when you're trying to only make 2 or 3 a go. Look at the majors if you're going to trade forex. As you can see here, the spread is a typical spread from a typical broker. Even pound yen, which lots of people trade, it's nice and volatile. It trends really nicely. It mean reverts really nicely. The pound Aussie, the pound Kiwi, a bit much wider spreads, but you can see that even the pound, I said pound yen, much more significant than some of the majors. So stick to the majors. Stick to a maximum of 2 or 3 assets, whether they're all forex or you're looking at crypto, gold, and a forex pair. Don't have too many on your screen. And I know a lot of you trade from your phone, so stick to one asset. I would say if you're using a phone because the screen's a bit too small. But find what works for you. Liquid pairs tend to follow the laws of ranging and trending more, simply because there's more participants, there's more liquidity providers, there's more competition for the business, there's more offers and bids. And the other key thing when you're trading, again, this is a rule for whatever type of trading you're using, but again, with scalping, everything becomes more concentrated because the time frame becomes much more concentrated. Don't have too many correlated trades open. So when we mean by what we say by correlated is it's like the position we got into on Friday night. We were short a lot of the dollar crosses, and we ended up losing most of them. I think we got one still open, the Aussie dollar. So for instance, the example I've got on there is if you're long the euro dollar and short the dollar yen, that's short the dollar, isn't it, on both those positions? So just be aware that you don't let those build up, and you keep that risk low, even when you have lots of correlated trades open, by always watching your risk and not having too many positions open and not having too many lot sizes open. That's the key to staying in business, which I will continue to repeat. Lots of people say, shut up, you keep saying the same thing all the time. But that's what keeps you in business, and that's what I'm here for. So as you wake up in the morning, what's the market doing? Are we ranging? Are we trending? Different indicators have different benefits in different types of markets. So as you can see here, we were trending here, we were consolidating here, trending, consolidating, trending. So in ranging markets, mean reverting markets, or mean reverting times, because obviously as a scalper, you're only interested in the next hour or the next 2 hours or next 15 minutes, even if you're trading on the 1 minute time frames. See what's actually happening at the time that you're trading. So if you're going to use indicators, you look at oscillators for ranging and trending. The trending indicators like moving averages and Bollinger Bands and others. And then obviously some indicators can be useful for both types of market situations. So 5 ideas. Focus on one market, whether it's forex or gold or commodities, and only have to say 1 or 2 positions open at one time, or 2 or 3 things that you're monitoring at once. Again, this is just my view. Trade in one direction. If the trend on the 15-minute time frame and the hourly time frame are both rising, we had a good day yesterday as well. Be careful trying to trade short positions, basically. So go with the trend of the day. How do you decide what the trend of the day is? Open up a simple 1 hour or 4 hour time frame and decide if there's a trend. If there isn't a trend, you're in a mean reverting market. But again, you decide what's happening and on that. Don't be on the screen too long. It can be very intense, very tiring, and above all, as with all types of trading, as I kept banging on about yesterday, and I'll bang on about today as well. Control your emotions. Fear, greed, hope, regret. Get rid of hope and regret. You either win or you lose. Accept it either way. Don't get too excited when you win. Don't get too depressed when you lose. Rinse and repeat. On to the next one. Fear and greed, keep them in control. You can't get rid of them. But always, always, always manage your risk. And I will not stop saying that, because that's what keeps you in business. So pros and cons of scalping for scalpers, for the average trader. You got a very high hit rate. So those of us that want to see that we're winning all the time, that's something that sits in our psyche. It's easy to predict the next 5 or 10 pips than it is to predict the next 50 or 100 pips, isn't it? So you get quite a high hit rate. So you get a relatively elevated feeling of feel-good factor when you're having lots of winning trades. Big benefit is you've got no overnight risk. You open your book 9 o'clock Monday morning, you close it 5 o'clock Monday night, or 10 o'clock Monday night, or whatever it is you're closing your session. You've got no overnight risk. There's no open trades. End of the day, you're flat. There's no positions. That's a rule I always have with scalping. When I'm winning or losing, if I'm going out, that's it. I'm finished. I've switched everything off for the day. Close out. I'm flat. Okay. Other big thing, you're using less of the margin on your account because your targets and your stops are much closer. If you're trying to get 15 pips as opposed to 150 pips, the margin that gets gobbled up is much, much, much smaller. Therefore, you have the ability to trade more markets. Although I'm saying, start off with only one or two markets, your targets and stops are therefore much closer, and therefore your margin, you're losing a lot less. And don't get to, once you've made your 10 pips or your 15 pips, finish for the day, switch off for the day, have enough if that's your target. And then you just start repeating the process, because it's all about process. Okay. Aim to, when you start, to make 10 or 15 pips a day, or points a day, depending on how you're trading. Okay. Another great benefit of scalping is that you get a lot of experience quickly, not in weeks or months. If you're a swing trader, you might only be getting 3 or 4, 5 or 6 trades a week. With scalping, you might get 5 or 6 trades a day. So as a new person, or even as an experienced trader that's coming into scalping for the first time, you get lots of experience with real markets, on real liquidity feeds, on real markets very quickly. So you can test your strategy, test your approach, test if it works for you, and you find out very, very quickly. So you'll get your 100 trades under your belt much, much obviously more quickly than you are if you're swing trading. You've got to be able to adapt. And so those of us that can swing from one to the other, you never get stuck in a position because you're not hanging on to it. One of the biggest problems, lots of 90% of traders I see, and I've seen tens of thousands of accounts, is that people can't give up losing positions because they always think it's going to come back, and you end up stuck with it. So something they think was going to be a 5-minute trade, they've still got 5 weeks later or 5 months later. Trust me, I've absolutely seen it. And you people, you people out there know what I'm talking about. Or it'll come back eventually. I'm down $500. What's another $100? Wrong mindset. So you've got to be in and out. You've got to be able to adapt, and that's one of the beauties of scalping. And you can get big long streaks, as I've said. I'm intrinsically an end of day trader. I'm intrinsically a higher time frame trader, but I apply that approach very quickly, that trend following approach, very quickly to scalping, and it's proved very, very beneficial very, very quickly as well. Particularly, some of the opening times, or the before the market opens on the DAX, for instance, is really, really good. Same with the Dow. They're the two major indices I scalp on an intraday basis. But so long streaks are possible. Obviously, the drawbacks of scalping are the flips of those benefits. So although you get a big high hit rate, you're only dealing with a distance of a few pips. You need high accuracies as well. So if your system or your approach isn't giving you that high hit rate, the accuracy falls down, and you can end up very quickly losing everything. It can be extremely exhausting because you're concentrating for a long time, or not for a long time. You've got high concentration levels. Okay. 3 is a key one. Okay, the cost per trade is much, much higher with scalping than it is on an end of day basis. Because your targets are higher, you need a higher percentage of the cost. So if you're only looking to make 5 pips and the spread is 1 pip, that's a much, much higher percentage than if you're trying to make 50 pips or 100 pips and the spread is 1 pip, because the spread is the spread, isn't it? So that's your cost of business, and that's what you need to always focus on, and it becomes even more so when you're scalping. Lots of people come into this not understanding the numbers, not understanding the money involved. There's no excuse for that. We're all grown-ups here. This isn't a game, it's a business. We're in business to make money. You're in business to make money. We want you to be successful because you'll tell your friends about how good we are. I'm just checking that spelling doesn't look right for some reason. I don't know. Scalpers, yes. I'm having one of those days this morning. So understand the basics, understand the ground floor levels. The other key thing that catches lots of scalpers out is they just jump in and they don't have a calendar beside them, or not news. They haven't got a news feed because sudden news announcements can cause massive noise in the market, or expected noise in the market, or rumors that are swirling around. So be careful on that as well. That's just one of the big risks of scalping. Obviously, the volatility has increased significantly since President Trump got elected. It's increased significantly since he got behind the desk in the Oval Office, and there isn't a day where things aren't moving. We've had JD Vance in Paris today, bigging up AI or American AI and threatening everyone else in the world who don't fall into line will slap your wrists. 25% tariffs yesterday from Trump on aluminium and steel. Aluminium, my American friends, it's spelt and spoken aluminium, not aluminum. But yeah, so that can really blow you off as any type of trader. But again, as a scalper, because markets overreact to news feeds or gossip on across the wires, it can be even more of an exaggeration. So where you think your stop loss is can be blown out of the water with some sort of comment from some political or economic leader. So be careful of the noise. Your time for money exchange is very high compared to like an end of day trade. When I'm looking at my end of day trade system, my system scans 50 markets very, very quickly. It'll give me potential trades, and that's it. It's on, it's set and forget, stop loss, initial target, off we go. Thanks very much. I'll look at it again in the morning. With scalping, again, whether you're using a robot or not using a robot, you're watching all the time. So you're potentially in front of your screen a lot, hence the concentration levels, hence the tiring situation. But probably most importantly is the number 6, which again, I sort of banged on about last night all the time. It exaggerates your emotions, the hope, the fear, the greed that comes with us as normal human beings is completely escalated as a scalper because the time is compressed. You can't see that, can you? The time is compressed, and let me just change the setup. So bring those captions. Get rid of there we go. Let's see all that. Sorry, just even my little box is getting rid of that. But you can see that says regret, hopefully, there. So yeah, so everything becomes much more focused and concentrated. So pros and cons, take from it what you will. Obviously, as I said, be aware of those time frames, the liquidity, the swap over from Europe to US, Asia to US volumes, liquidity leaps up. This is make sure if you're a scalper, try and make sure you're in the deep liquidity, the deepest part of the pool. You're not going to jump in the pool and smack your head on the bottom of the water or the bottom of the floor because it's too shallow if you're trying to scalp round here before Sydney's open, or there's only Sydney and New Zealand open. Be careful about spreads and spikes in the market around that time. So have a calendar open, have some sort of news feed, just be aware of what's going on. So what makes a good scalper? You've probably guessed what I'm going to say. Emotional control. You've got to understand yourself. Again, that's clear for all types of trader, but even more so for scalping because of the time frame. You've got to be able to handle pressure well. Everybody says, I can cope with pressure. I like a bit of stress in my life. But as a scalper, it's a continual and consistent daily process of your trading life every single day if you're trying to do it very, very quickly. That's why the guys in the city of London or in Frankfurt and New York, Tokyo, the big trading hubs of the world, Singapore, it's a young man's life because they're under pressure all the time from their banks and their brokers. Bang, 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 bang every single day, early in the morning, not till late at night, but when the markets close, they're off and out. Whether the pub or they're going home, but you've got to do it on a consistent and continual basis. Can you cut your losses quickly? Can you accept you are wrong? Again, if you can't be a good trader, there's absolutely no point in trying to be a scalper because it's exaggerated. You'll find out very, very quickly. You've got to be able to make quick, decisive decisions and accept whether they're right or they're wrong. I call it a cognitive load. Your brain sometimes can become a bit overloaded. Dealing well under stress. That's different to the first point when I'm talking about dealing with pressure well on a continual and consistent basis. These goes on in days and days, so the pressure's there all the time. And you've got to be able to adapt quite quickly to being wrong and being out or identifying this is a strong trend, so I can add to this short-term position and keep going, or I'll close this one and add another one, close this one, add another one. You've got to be able to adapt to, and then some news comes out or something surprising comes out, and all of a sudden it's turned around. You're out. You've lost that what seemed a really strong trend. It's suddenly all over, and it's bing, 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 and this can all happen in seconds sometimes, literally seconds sometimes. So how do you deal with that? How can you cope with that? Don't get over excited when you're winning. Don't beat yourself up when it's a losing streak. And doing that on a daily and continual basis can be quite exhausting. And a lot of people find it difficult. So in summary, as I say, if you want to get started, if you've tried scalping, it's not worked for you in the past, focus on one market, trade in one direction, limit your screen time, always control that fear and greed, and always manage your loss. When you do lose, and again, we all lose trades. With scalping, you lose a lot of trades quite quickly, and can you cope with that? Keep the losing trades small. It's a major mantra. So lots of different approaches. I'll run through, where are we now? We're half an hour in. Okay, so any questions, anybody, about what makes a good scalper? Can you be a good scalper? So look, and we'll just run through some old charts of mine, and we'll bring up the trade locker in a minute. Okay, and we'll have a look at some live positions on these different types of approaches. So Heikin-Ashi, old-fashioned crossing moving average strategy. You see that on the white chart. Pivot points and bounce and break. I haven't got that up on my trade locker setup. I haven't showed you on my trade locker setup before, but we'll have the 21 EMA and stochastics. We used to. I've got the stochastic set up on a different platform, and the AMA and TEMA as well. We'll have a look on the trade locker platform as well if we've got time. So it's 11:30. So any questions? Let me take a quick sip of coffee and we'll have a look at these charts in a minute. Okay, see what we can get through. And obviously we're going to have a look at VWAP as well, which is what lots of people use, and I've become quite a fan of it, certainly on these short-term time frames. But the principal one I use still on the short term remains these crossing EMAs. The 21 EMA being the key one. Okay, so Heikin-Ashi, it's a different type of chart. It means average bar. It's a weighted candlestick. It's not like a normal open, high, low, close bar. Heikin-Ashi formula modifies it. It gives you the average of the last two bars. It's a weighted candlestick. So a new Heikin-Ashi candle, because of the formula, will always open in the middle of the previous bar. So that's the maths behind it. I'm going to run through these very quickly because I'll do individual sessions on each of these strategies as separate loads. So instead of today, or should we just run straight to the charts? Or let's just run through these quickly anyway. So that's the maths behind it. So there's the Heikin-Ashi open, sorry, Heikin-Ashi close, Heikin-Ashi open, Heikin-Ashi high, and Heikin-Ashi low. So it's not the actual price, it's the average price of the current bar, the midpoint of the previous high-low bar, the highest value in the last three candles, and the lowest value in the set, or the last two candles. Okay, so that's what creates a Heikin-Ashi bar. They look like normal candles, but they're not. So here, this happens to be from 2019. It happens to be the monthly. I know we're talking about scalping today, but the theory or the principle is exactly the same regardless of the time frame. So here, a white candle is positive, a red candle is negative. So we've got a strong uptrend here. The sort of the mid part of 2020. 17, sorry, the end part of 2017 and into 2018 and 2019, the euro dollar significantly declined. Look at that, 125 for euro dollar, and even 110.40 there, September 2019. So when you're negative, when you have a positive trend, candles with little wicks to the north, south of the candle is very, very positive. Big bodied candles are also positive. When you're red and negative, you don't want wicks to the north, and you want big bodied candles. So strong 3, 4, 5 month run there for this particular asset, and then there's a bit of indecision. It went up, went down, sort of ended up better, but then another 2 months, 3 months down before it had a positive month, but the trend was still set, wasn't it? And again, this could be a minute candle. It happens to be a monthly candle. It doesn't matter. That's how the clarity of there we go. The clarity of Heiken-Ashi candles is what is its big appeal. You see here, this is the minute chart for the same thing. Euro asset all the way down here for whatever it was, 15 minutes, and then a strong 5 minutes here towards sort of the close on 6th of December, 6th of September, whenever that was. But as you can see, this is one of the problems with Heiken-Ashi candles. That's the actual price. One here, 1.1027. Although the candle is close here, so normal candle, you think, oh. So if you bought this, for instance, at this point now, you'd be paying this price. So the candle is, not really representing real price. So if you're going to scalp with it, be careful, or have a normal candle set up next to it as well at the same time. But you see, the beauty of it for scalpers and any type of other type of trades is the clarity of the strength of the trend. If there isn't a trend, we'll be chopping between. Oh, we would have been chopping between red and blue, but as you can see, red and white. As you can see here, it flipped literally here from a big downtrend with remember wicks of a rejection of higher prices, rejections of lower prices. Same here, but we flipped from red to white, so it was turning positive, and it only finally really turned strongly positive here when there's no wick, although this is quite a strong one given the body of the candle. This is a big, strong bodied candle going down, and then it petered out. See the strength of the candle size small. Then we've got a wick to the north. Next minute still looked quite strong, having had that hesitation. Then there was more hesitation, and then it flipped. And so that downtrend, you'd have been out at this point here. So when it went from red to white, that's a simple, very crude but simple way of trading with it. The change of the candle colors. Well, that's what you got to do with Heiken-Ashi. Here's the same thing, 5 minute chart, and you see the difference in the normal candle patterns. There's lots of red ones in here. Here, there's only 2 little red ones, and flip there. Here, it hasn't actually. Still, the trend's still valid, and it's continuing. So here, we've had a bit of a tweezer top here on this one, and down. So you see the 855, 855. This one was still positive. This one's turned. The normal candles of close to the red candle. See, so because you can see it's averaging out the last prices, so it's still positive. It's still collecting this move up here, the Heiken-Ashi candles. Okay, so I say it's constructed or looks like a traditional candle. It looks like a normal. It doesn't look different, but it looks the same. It's constructed differently, I should say. Works well on all time frames. The higher the time frame, the better. Many people argue, but I still I would support it as a scalping approach as well on the 4 and a 1 5 minute time frame. Remember that the candle always opened in the middle of the previous candles. That particular setup, I've got it white and red. If I bring in it on, can you see? Hopefully you can see. This is my trade locker here on the 5 minute for gold. Here I've just got it red and green. These are Heiken-Ashi. They're not Heiken-Ashi candles actually. Yes, they are. There you can see that Heiken-Ashi candles. We got pivot points here. We'll come to the pivot points in a minute, but you can see same principle: positive, negative, negative, hanging around the pivot point, or a resistance for the day. First resistance ran to second resistance today. We'll come to these when we're looking at resistance in a minute, but that's what it looks like on the trade locker platform. Okay, just writing down on this on the slides we've got here. So so you look for a strong trend, as we say. The size of the body matters. Doji candles still have the same interpretation as we do with normal candlesticks. That's balance. Markets in balance. So you're looking for a reversal or correction. The strongest trends have no wick, whether we're going up or down. We have big body candles with no wick, as we saw before. So for up trend, you want no downside wick. The trend is strong. Get in, add to your position, and conversely for downtrends. And again, that's regardless of your trading time frame. With obviously the live, as I pointed out, the live price, the normal candlestick is much closer to the live price. The close of the Heikin-Ashi candle is some distance from the live price we just showed you there, because it's the average price. A strong trend, either positive or negative, regardless of the time frame. Again, remember, my friends, no upper wicks look to be short, no lower wicks look to be long. And again, if we just look at, if I just look at this, this is the current trade we've got open on Aussie CAD from last night. It's actually out of the money at the moment. There's the two, but that's the different asset. And again, you can see it's rejected today. It's rejected R1. Yeah, so we've rallied into R1 today, reject it, and moving down. We're into the, come to this again, we're into the VWAP today, the support. So we were positive above it, into R1, nice simple entry target level as a scalper. Then we've rejected down, so out there, and we'll see what's happening now, because we're right at the volume weighted average price, sort of 3/4 of the way between R1 today and the main pivot area, which is at 89.75. So again, regardless of the asset, the setup is what, and the strategy and the follow through is what happens. So positive, you could have got out the first red there, got back in on the green, again got out and got back in there, got in there. That's nice and strong. It's sort of consolidated, but got in again there. Remember, you would have paid this price, potentially got out, got in, and then a nice long run trend. And again, rejection round short around the R1 level, because we broke through it. What failed, and then failed significantly here at 920, and then all the way back down. Where did we first stall? We run nicely down to the VWAP, and then bounced off it, and now we're in sort of sideways action. Again, that just happens to be Aussie CAD. And who would think that you could scalp the Aussie CAD? Well, you can, my friend. You can scalp any asset. Any asset follows some of these rules. So give it a go, my friends. Anyway, more on that in a minute. So that's Heikin-Ashi candles. There's the Heikin-Ashi candle compared to the normal candle again. The 1-5-15, clean, clear, simple. That's why I like them. Depending on the time frames, I have them side by side here. Different ways of approaching. So this is the same chart again on the 15-minute, 5-minute, 1 minute. You can see you're in and out here on the 1 minute. Nice strong move up, strong here at the end. It's strong here in the minute, 5-minute, 15-minute. You've always been, long above and trending nicely. So 15 minutes positive, 5 minute 10. So there you go. You're with the trend, and again in and out. It's a short term. So take your time frame, take your approach, and may the best man win, as they say, the best lady win. So that's trending. I think I've gone through that. I've beaten that enough. Strong trend to wait for the color change. Sorry. Whoops. Let's go backwards. So wait till there's a color change. Wait for a strong body size of the candle before you get in. Add to your position as it's starting to move up, or simply, whoops, I'm going backwards. Sorry. Wait for the color, a simple color change, and follow that rule. They get more chopping, but you get less chopping and changing with the Heikin-Ashi candles you would with a normal candle. So, but the beauty of this is you'll get lots of failed trades, but you will get the long platforms. Where's my chart gone? I've lost my chart. Some reason. As hopefully I've just demonstrated here on the gold chart. So they just, although here, so this is today, 5 minute on gold. So we'd have been long initially above VWAP as well into R2 this time. So it's strong, heavy reaction to that though, wasn't it? But again, the pivot points have proved really well. So first test, Second test it broke, but you can see here, so we'd been short, long there, short there, out there, short there again, out, and then nothing happening. The bodies of the candles very, very small. Just make that bigger. There we go. You can see. So again, we are negative, looking to take, although the higher time frame is positive, we've rejected VWAP, and we're moving down. We're under R1 again now. So next level is the pivot area here at 28.8377 on gold, but we're chopping around, and we're consolidating at 2090 at the moment. Another big round, or 2095 round number coming into play on gold today. So lots of variation. So the trending not happening. So again, play that as you will. So that's Heikinashi. We'll come back to these in a minute. So sorry. Next one we're going to look at is the moving average cross up. We've seen that many times on the default charts. These are some old charts from before. You can see, oh, it's really messy, isn't it? You can see the 5 and the 9 crossing. Let me just bring up the I keep losing my trade locker platform for some reason. Where's it gone? Yeah. So crossing EMA strategy for let me just for scalping. So it's a bit messy. This isn't how messy this was, but it's the 1 minute on the euro. Basically, looking at the cross of the charts. Basically, the orange is a first trade here. It then goes back under the 9. So we're in there, out there, in there, out there. That's positive. Orange is positive, red is positive. Then it goes short here at blue, and we cross back under the 5 and the 9 cross. We're back under the midline of the Bollinger Band is here, but this could be the for the actually. Let me get the current platform. Let's get rid of that. Get rid of that. Let's make it a bigger picture. Let's get the right platform up. So this is what I'm demonstrating on the short-term strategy is basically the crossing EMA strategy. So if we go to the 5 minute time frame, you can see here. So it's sort of just ignore all the indicators at the bottom here. This is obviously my standard setup. So here on the 5 minute time frame, we're looking for a cross of the red line. Again, ignore the blue line to an extent as well. So it was short this morning here. And then we got out here, so that was a losing trade because it reversed back to our 9 period. It went along there, and again, that's losing trade. It's gone short here. That's been a winning trade. It's gone long here at 05. That's a winning trade as we've trailed up and come back through the 9 period. It's gone short again there at 626. And again, it's been moving down. That's reversed back up there. So it's a bit of a gain. We've gone short again here. And it's gone back down. Thank you very much. It's reversed again there. So that's out, but a winning trade. We haven't gone long. We're looking to go short. We'd have gone short there with a stop loss up here now. And that's remained short because the trend is down. See what I'm saying? We're under the 20 period. See what I'm doing here? That's the last big short position was there. That one. Hopefully you can see what I'm saying. What we're using. Go through. The last big was that one there because we're trending. Remember, we're trending. We look to go short. So the moving out of the initial short here was the 5 period crossing underneath the 9 period. It also crossed under the 20 period, the red line here at 625. Having had some losing trades earlier, and we've gone down, 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 down. We've reversed back up through the 9 period. That's the way of trading this, but we're still looking to go short because you can see we're under the 20 period moving average. So that was a winning trade. We obviously gave back some. We've then gone short again here as we've gone under the 9 period again. at that point at 720. It's gone down, it's gone down, it's gone down, it's reversed back up over the 5, and then it's reversed back over the 5, so that's closed out that next short. But we are looking to go short, so we've actually gone short there. Actually, not that one, I missed that one. We've gone short there because we're in line. See, the moving averages haven't crossed. The 5 and the 9 are still in unison, so we've gone short there. It has gone back up there, but we haven't brought the 20 period, so we might have got out there, got back in there, got out there if you're using the 5 period, and then gone short there, down, and we're using the 20 period now as our stop loss area, not the 9. So we're running down really nicely and still short. We haven't gone over, and finally here at 11:20 we burst back over the 20 period moving average. Okay, so and we got a nice run on that one today as the trends unwound. Okay, a tighter way of doing it is what I was doing before. We use the 3 moving averages, so we're getting when they're all in alignment here. So there's the major cross there, the blue line. The 5 in the 9. In fact, it's the time before there. It's 6:20. That's what I said before. 6:20. This system has been short, looking to take short trades and add to it short trades, not take long trades. From 6:25 basically, because we went under the 21 EMA. That's the key indicator. The other two, the faster moving average, the 5 and the 9, the medium crossed earlier, and we then 3, 5, 4, 5, 6, 7 negative candles all in a row kept us short, trailing our stop loss down, stop loss there. Big move down, might have pulled our stop loss down a wee bit then and got stopped out as it's reversed back up. But if you want to trade this aggressively, you get out when it reverses back over the medium moving average, which is here at 720. So even then you would have made all that profit. If you want to be following the trend, but using the higher time for the 21, you can see you've stayed in short all the way down here. So the 21's kept you short. And that's my key pivot. So this is still not long for this strategy. We closed out there at 29.06 from an entry this morning at 29.21. So what's that? $15 on dollars. That's a lot of pips, isn't it? And thank you. And then what's happened here is, if we zoom up here, you can see that the moving out just had a little minor cross there. So you might have got out earlier, but we hadn't broke the 20 period there. Obviously, the break of the medium happened here, so you'd have got out there. Break of the 20s happened there, so you'd have got out there. So, but this would have then taken you short again because the 20s held. That's then taken you out of that one because it's gone back over the 20. And you might, depending how you were feeling, having bagged all those pitches and wanting to go, aggressive traders would have got back in there on the break of the, at this point here. This is 11:25. This has gone short again. Actually, it's not under the 5. Yeah, it's not until that point there where it's gone under both the 5, the 9. You see on that one, it's just above the 9. So that's been short there. With our stop loss up here now, I would guess the 20 is a bit too tight at the moment, but obviously perhaps running out of steam. But again, short again now from that one. That's the last 5-minute short on gold this morning with this strategy at 11:40, 10 minutes ago, with my stop loss nice and tight. I haven't bagged all those pips from this morning. Around about the top of those wicks at 209.60, 209.635 is my stop loss. My entry is here at 209.036, and we'll see how that. Let's just see how that pans out, shall we? But I'm happy, bunny, because I would have got those. What's that entry? I'm not interested in putting a target. Let's put that on. So the last entry would have been there, the close of that candle there. So out of the money, and we're just about to get stopped out by those things. Yeah, we'd have been stopped out now on that. So that's a losing trade from there to there. So that's a loser. And now this is looking to potentially cross, isn't it? But we'll let's wait and see. See if does the moving average. We can't see because we took the can't see the candles what the moving average is doing. But the trend remains down, doesn't it? So are we going to buy this? Well, we will be above the 20, and it's the first time since 6:25 this morning we have been above the 20. So let's see. Looking to go long potentially on our stop loss. So our reverse immediately. The RSI, you could argue, is looking positive. It's perked above the 50. It's still relatively negative, isn't it? But perked above the 50. MACD is supporting the move up as well. If you look at MACD here, see it's crossed earlier down here. So the moving average has been a bit late. So yeah, that's looking to trigger a cross, but only in 3 minutes when this candle completes. See what I'm saying? So it's a very simple trend following strategy. If markets are going in a trend, you can make money. If they're going sideways, you've got lots of failed moves. But as you can see, some massive moves potential. So it's a very simple strategy. Moving average. Lots of people are very poo-poo the moving averages. Well, hang on a minute. Let me just put that in there. So I'm bringing up. There we are. Group 2. So the 5, the 9, and the 21 exponential moving average on the charts on my trade locker. I've just shown you the white background. This is a dark background, and I'm using the midpoint of the Bollinger Bands here because that's the 20 simple moving average. These are so that's the 5 and the 9 EMA and the 20 simple moving average because it's the midline of the Bollinger Band. The principle is exactly the same. Okay, so trends can go on and on. There you can see that nice and clearly there, can't you? Blah, 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 blah. Up out as it's gone under the midline again, and then it's gone short at this point, having gone very long. That's the same charts. Okay. What are we doing for time? 50. We've got 7 minutes left. Oh dear. Perhaps let me wrap this up now, and we'll come back and do some of these other strategies another day or in the next. I've got 7 minutes. See how much more I can do. So, pivot points really good on short-term time frames. We're looking for. With this strategy, we're looking for a test or a break. So we're either going to bounce from the pivot point or the stop and or the reverse or R1 or R2. We're just using R1 and R2 here and R3. I know some platforms. I think the Trade Locker platform gives you 4 and 5 as well, but really useful for the 1 minute and the 10-minute time frames on standard candle patterns. Okay, so we're looking for either hit one of the lines, whether it's a support or resistance line, doesn't matter, or the pivot point, or we're breaking it, and these are the rules for which one we use. So you enter your trade when the first price bar that fails to make a new low or high is broken. The following list shows the steps required for both long and short entries. Price structure touches the pivot, support, resistance point. Subsequent price fails to make a new low. So we're going, it's going down. It's hit the pivot point or the support resistance area. The next bar after that doesn't make a new low. The subsequent bar, the following bar after that, breaks the high of the previous price bar. Okay, it's very simple. Difficult to say, very simple on a chart. So we hit one of the lines. The next bar, does it make a new low? No, it doesn't. The next bar, does it break the high of the previous price bar? Then that's when you go long. So they basically, that in this point, we've bounced off the support, the resistance, or the pivot point line. Okay. Short trade is the other way around. We're going up, we hit it. Next one doesn't make a new high. Next one below that makes a new low, and we go short. Okay, very, very straightforward, very, very simple. Let me just try and show you again on a chart. So this is the pivot points. And so let me just, I can't remember where I put the pivot. Where was the pivot point? Did we add it to this one? I think we did. Yeah, these are the pivot points. Okay, so 5 minutes. Let's do the minute, make it a bit more interactive. Pivot on the gold chart. Let's get rid of these. Get a bit more. Yeah. exciting. What's been going on today on the 1 minute? Well, what happened today? Here first, what's happened? I want to zoom up. Why can't I zoom up? Actually, let me go back to the 2 minute or 3 minute. Might be easy. There we are. That's easy on 3 minute. You can see that. So what happened? Well, right, first time we'd come crashing down. So be aware of that. We'd come crashing down. Let me change the candles to normal candlesticks for the sake of this. Okay, there we are. There we are. So 3 minute, we came crashing down. We'd gone through it. The next candle did make a new low, so we'd have gone short at this point, but it reversed again, so it hasn't worked out. This time, what's happened? We've touched it here. In fact, we just touched it here. Next one didn't make a new high. Next one was low, so we've gone short there. Okay. Next time, so we've gone short and we trailed our stop loss down, and it's flattened out, gone down again, and we've probably been taken out around about there as it's turned around, as it's gone back through us here. First time. Next one, we actually break, which is always interesting. We break on the completion. Next one makes a new high. Next one doesn't make a new high, does it? Because that's a subsequent one. So it's failed the break. So we're looking to go short. Sorry, the bounce. Sorry, the breakthrough. Sorry, we haven't bounced. We've broken through it. Okay, so the next one did, but the next one, subsequent one, didn't actually make a new high, did it? It might have done on an intraday, so we might have gone high, but we've then come back. We then made a new low again, so we've gone short on the next candle here at 618, and then we've been short and we've trailed our stop loss down. Stop loss was there, next leg down, stop loss there. We've gone down again. I would have either been, stop loss would have stayed there, or I might pulled it down and got stopped out here, but we're still, this is still short basically, isn't it? Because it's moving down and down and down and down. Okay. Next target could be the pivot long point, who knows, but you can see the point. So that's how we use pivot points. Okay, that was a 3 minute. Let me just change the, did I change the candles back from Heiken? I did, didn't I? Yeah, okay. Obviously here you've got the VWAP to help or hinder as well. You see the VWAP's held there. It's sort of held and broke through there, then it's come back to it and then it's broken in it. So you can see the trend remains to the downside. So that's the pivot point approaches. So we've got two approaches. The bounce approach, where it bounces off the pivot point or the support and resistance line. And again, just to show you, bring this back up. Sorry, I didn't demonstrate that very well, did I? If we take it up to the 5 minute, might make it the chart a bit easier to see. There we are. I'll get rid of. Remove that. There we are. And obviously the pivot points you can have. So I prefer just 1, 2, and 3 support, 1, 2, and 3 support, 1, 2, and 3 resistance. Pivot point here is blue, so it's generally positive from yesterday because we've had this massive. This is gold, remember, we've had this massive run. 44% of the time the market will get to R1 or S1 during the day, so it's quite high. Typical. Oh, is it 60? I can't remember. R2 is only touched about, I think, 44% of the time, I think. Anyway, I'll do a proper webinar on using pivot points, but they're really useful for intraday traders. And here, what's the argument? Well, the bias as a trend following trader is that we're still, because we're above yesterday's pivot point. Now it's yesterday's pivot point. Yesterday's pivot point, sorry, we're above that. We've ran to R1. We couldn't get to R2, so we're biased short currently because we're under R1 and we're under the VWAP at the moment. So we're tricking low. We're literally halfway between the VWAP and the pivot point. So it's a downtrend. It's not particularly strong, but we are short basically. That's what that's telling us. And as a pivot point trader, you've had your 2 or 3 trades because we've hit it, well, once, twice, 3, 4 trades to this morning. A couple of them losers, but we're currently on a big winner. And if you'd caught that one, that would have been a loser, wouldn't it? That's a winner. That's been a winner, and we're currently positive pivot point trading. Okay. Hope that makes sense. I'm over the hour. How many more slides have I got left? It's quite a few, isn't there? What was I going to else? Was going? There's same. There's an example of what I've touched. So you can see we've touched here, made a new high. So it's a lower high after touch and break. So we're looking to go short because that has held. I'm saying. So there was the touch. The low was lower than the high was lower than the previous high. These two here. Regardless of what the subsequent bar doesn't make a new high either. So we're looking to go short either there or on that one there. And then we've moved down to the next, whatever this is, pivot line or support and resistance line. Hello? Uh-oh, what's happened there? My screen's gone. That might be telling me to, oh no. And this one's the breakout strategy. That was a bit scary. I've obviously been talking too long. So there we broke it. We made a new low here on the subsequent bar. Although we retraced, we're looking to be short on the next candle, and then bang, the confirmation was here really, and then big move down there. So that's the break of the pivot support or resistance line, or the bounce of the support or resistance line. Very simple again. Hope that makes sense. There's my EMA and the sticker. I won't do that one, and we'll save these for another day. Okay, EMA, TMA, again trending type strategies, and using the cross of the moving average. Sorry, the cross of the indicators to trend, and I'll do that. I'll create a new profile for that. But the triple exponential moving average here, and the AMA ultimate moving average, two lines. As you can see, when the flatness, there's no trend. Okay, so you want to be either wherever the price action is telling you. But here you can see we're trending lower here on this particular pair. That happens to be the dollar yen, both the red line and the blue line to the downside. Somebody was asking me last night about the books again. These are the books from last night, the three of my all-time favorites. The Reminiscence of a Stock Operator, Trading in the Zone, and The Market Wizards by Jack Schwager. If you only have 3 trading books, have these 3. If you only have 1, it's a mindset game. I'd get this one, but definitely read the other 2 and anything that Jack Schwager's written subsequently. Fascinating story of successful traders. 2 of my recent favorites from last year and the year before was Best Loser Wins by Tom Hugard and Steve Goldstein's Mastering the Mental Game of Trading from last year. Absolutely stunning pairs of books, both of them. Get them if you can. Both of them published by Harriman House here in sunny, dim, distant London. So there we have it. So we've had, are you designed to be a scalper? I've explained what scalping is, the definitions and approaches. 5 ideas for getting going. The pros and cons. What makes a good scalper? What are their attributes? What makes them successful? It's a psychological business, this trading, as I say all the time. And we've been through 5 or 6 trading styles. I mentioned the VWAP much, but VWAP you can stick on your chart, and remember it's what lots of scalpers use these days. So thank you very much. We'll see you all again next time. If there's no questions, I'll wrap this up because I have run over the hourly. I was trying to keep it to an hour. I went for 90 minutes yesterday, but it was a long one yesterday. So have a great day, everyone. Remember, our platforms are here to help you. There's not a lot of data today. It's quite a quiet day. I said there's that AI conference going on in Paris at the moment. The main event of the day will be Mr. Powell's first day of testimony to the banking committee. It tends to be the most volatile, so watch that at 1500 hours GMT. Generally, today we've got so as we've just been seeing, we've got we've got if we go up to the hourly time frames. for everything. We've got a strong gold market still, but as we say, as scalpers, we've run out of steam. This is a new all-time high this morning at 29.43 area for gold. If we look at some of the other platforms. That was gold, wasn't it? Sorry, we've got gold. Indexes, we were down yesterday. S&P 500. Let me put the white one so you can see a wee bit better. We got to the hourly chart. It was a down day yesterday. We were negative into 6,000 this week. Again, not on Friday. But weekday yesterday, and we're weak at the moment, 6,050 so far in the futures market for the S&P. That consolidation continues at highs. Still relatively bullish, but we could be looking to break lower potentially if we can't get back over 6,100, which we didn't on Friday. Bounce back yesterday, and sorry, I said negative. It was bounce back yesterday, Monday. So 6,000 remains big support. 6,100 remains a resistance area here. This morning, the DAX continues to push to new all-time highs. The FTSE in a similar vein, big strong days, big strong bounces yesterday, both in overbought areas, but so what the trend is to the upside. Gold has hit a new all-time high. As I said this morning, sterling 123.64, euro 103.23, still under its 20-day moving average. Sterling also down day yesterday, down day again today, and the yen continues to strengthen, although it gave a wee bit back yesterday, and it's given back cut so far today. We're back over 152 from the big break of 155 and 154 last week. So 150 still calls for the dollar yen to the downside, trending still moving up. RSI ticking up a wee bit today. So there we go. I'll see you all later for an update. Let me just check it's a bit early for obviously end of day setups, but our end of day strategy at the moment. Let me give it a quick refresh for tonight. In fact, we can go to our open positions in a minute, can't we? We are currently, that was yesterday, wasn't it? It's the 11th today, isn't it? I've got Aussie CAD long triggered last night, didn't it? Saying it's long today. Is it Aussie CAD we got open? I thought it was. Oh, my system's playing up. I had a trigger last night, but it's moved it to today at the moment. It was Aussie CAD, wasn't it? So yeah, we're long anyway. We're out of the money at the moment, but yeah, it's triggering. It's saying it's going to go again tonight, which is interesting. Euro Swiss also potential long position tonight. At the moment, obviously this is at the moment. Euro pound also long potentially tonight, and dollar Swiss, which we had a big loser on the other day, didn't we? Is long again tonight as well. I might look at that. Let's look at those. So a potential end of day trades today. I'm going to have another look now whilst when I get a look. Is Euro Swiss long, Euro pound long, and Euro and dollar Swiss also long. So I'll have a look at those in a minute and see if we can perhaps get in a bit earlier than tonight if the trend continues. But let's see what happens actually on the close of business tonight. Elsewhere, CAD yen, potentially Euro Swiss also on the more aggressive side, pound Swiss aggressive as well. So Swissy's a bit weak today, yen's a bit weak today. But let's see what happens on an end of day basis. Obviously, if you trade in different time frames, take appropriate action. Currently, we are down, I think, 19 pips or so for the week, but it's only Tuesday, so let's see how that pans out. And as I say, every day, do come and join us. We're here to help you. More I see of the competition, the more proud I am of what we offer. We're very open, we're very transparent. There's no messing about getting funded. 2 stages is our most popular approach. Coupons are available. Ask 15%, 25% discount sometimes. But get a decent size account, guys, is what I'd say. For $300, $350, 50,000 to play with gives you lots of margin. Remember what I'm talking about margin when you're scalping. It can gobble it up. 100,000 account is $500, but again, see if you can get a bit of a discount on that. And the rules are there to help you. Follow the rules. You can be successful. You can get a $100,000 account if you hit 10% and then 5% in the second step, and make sure you're not losing anything close to 10% or 5% on a daily basis. And it's there to be done. My friends, understand the leverage, understand lot sizes and stuff, and the refunds are there for you. Prove yourself to us. Tell your friends. All right, take care. I'll see you tomorrow. Tomorrow is the big one this week. It's the US CPI data, but we could have some more fun from Mr. Powell at 3 o'clock. So watch that for market volatility later on today. Take care, everyone. Stay safe and stay warm if it's as miserable out where you are as it is for me here. Okay. All the best, everyone. Bye-bye.